Breaking news! Bitcoin has just dropped below $100,000, and a staggering $10 billion has been liquidated in the crypto market. But here's the big question. Is this a bear trap, a fake out before a massive pump, or are we heading for an even bigger crash? In this video, we'll uncover the truth behind this price drop, analyze expert predictions, and show you what's next for crypto. Make sure you watch till the end, because the final prediction might shock you. Let's break down what just happened. Bitcoin recently dipped below $100,000, causing panic across the market. But why? At number 1, macroeconomic factors. The U.S. Federal Reserve is hinting at possible interest rate hikes. This uncertainty is scaring investors and making big institutions cautious. Secondly, whale movements. Large Bitcoin holders, or whales, have been selling off millions of dollars in BTC, triggering a domino effect. At last, liquidation spiral. With highly leveraged traders getting wiped out, the market saw a chain reaction of forced sell-offs, leading to a $10 billion bloodbath. But that's not all. Recent geopolitical and economic concerns are adding fuel to the fire. Inflation concerns have risen following U.S. trade policies and import tariffs imposed on China, Canada, and Mexico. Investors fear that these tensions could further weaken market stability, leading to a sell-off in speculative assets like Bitcoin. However, some experts believe this dip could be the start of a larger correction, potentially pushing Bitcoin down to $95,000 before stabilizing. According to Ryan Lee, chief analyst at BitGet Research, the $95,000 range remains a critical support level, with market sentiment and Federal Reserve policy expectations playing key roles in Bitcoin's future movement. Upcoming economic events to watch. The U.S. Bureau of Labor Statistics will release its labor market report on February 7th. If the report indicates economic slowdown, the Federal Reserve may consider rate cuts. Rate cuts typically create a more supportive environment for Bitcoin, potentially fueling a recovery rally. So, while panic grips retail investors, smart money is watching these upcoming reports carefully. Could this be the last chance to buy before Bitcoin bounces back? Keep watching as we break it all down. But is this really a sign of danger, or is this just a classic bear trap? Let's look at what the analysts are saying. Now, let's dive into the $10 billion liquidation event that wiped out over 730,000 traders. But here's the twist. Was this just a glitch, or did exchanges intentionally withhold data? API limitations and misreported liquidations. Reports initially suggested that Bybit suffered only $333 million in liquidations, but the real number was a shocking $2.1 billion. Why the discrepancy? According to Bybit's co-founder Ben Zhou, this happened due to API restrictions. Crypto exchanges limit real-time data feeds to manage server loads, making liquidation figures seem smaller than they actually are. But Bybit has now promised full transparency moving forward, meaning traders will finally get real-time liquidation data. A big win for the crypto community. Biggest liquidation, $25.6 million on Binance. The largest single liquidation came from a Binance ETH/BTC trading pair, totaling $25.6 million. This shows how volatile the market is when leverage goes wrong. Over 730,000 traders got liquidated, meaning retail investors suffered the most while whales took advantage. But here's the kicker. While thousands of traders lost everything, some actually made millions. Traders profiting from the market collapse. One sharp trader made $16 million on a 50x leveraged short position betting on Ethereum's crash. How did he do it? Hypothetical tips. He might have predicted a drop and timed his entry perfectly. He might have used proper risk management, unlike most over-leveraged traders. He might have exited at the right moment, taking home a massive profit while others got wiped out. This proves one thing. Smart money makes moves while retail traders panic. Despite the recent correction, Bitcoin's long-term outlook remains bullish. Here's why. Bullish indicators. Spot Bitcoin ETFs. Institutional investment is rising, with ETFs surpassing $125 billion in trading volume in just a year. Analyst predictions. Many experts see Bitcoin reaching $160,000 to $180,000 by the end of 2025. Supply shock. With the next Bitcoin halving approaching, the reduction in new BTC supply could drive prices up. Global adoption. More countries are considering Bitcoin as legal tender, leading to mass adoption. Corporate interest. Major companies like Tesla and MicroStrategy continue to increase their Bitcoin holdings. Bearish risks. Continued macroeconomic uncertainty could delay a strong recovery. A break below $90,000 could trigger further sell-offs toward $80,000. Government regulations or potential bans on Bitcoin could impact its adoption. Now, let's shift our focus to something that could shape Bitcoin's long-term future: crypto regulations and political influence. The U.S. government is preparing to introduce major changes that could impact the entire crypto market. But will these regulations help Bitcoin or slow down its growth? Let's break it down. U.S. lawmakers and crypto regulation. What's coming? Anthony Scaramucci, founder of Skybridge Capital and former White House communications director, believes that crypto legislation is inevitable, and it's coming before the 2026 midterm elections. In a recent Financial Times interview, February 4th, he stated that lawmakers facing tough elections in swing districts will try to gain public favor by supporting crypto-friendly bills. This means we could see a burst of legislative activity before Congress breaks for the 2025 holidays, potentially including a crypto market structure bill aimed at bringing clarity to regulations. But here's the key question: will these regulations boost Bitcoin or hurt it? Potential benefits of crypto regulations. Clearer regulations could attract institutional investors, leading to higher Bitcoin adoption. A structured framework could reduce scams and rug pulls, making crypto more appealing to mainstream users. Countries with clear crypto laws, like the UAE and Singapore, have seen massive investments in their digital asset space. The U.S. could follow the same path. Risks and downsides. Overregulation could slow down innovation and push crypto businesses out of the U.S. So, where does this leave us? If regulations are passed, we could see Bitcoin gain legitimacy, bringing in institutional money and pushing prices toward new highs. However, if regulations are unclear or restrictive, it could lead to short-term uncertainty and price volatility. The next few months are crucial. Watch closely. So, is this dip a golden buying opportunity or the start of a prolonged bear market? Let us know in the comments. If you enjoyed this video, smash that like button, subscribe for real-time crypto updates, and turn on notifications so you never miss a crucial market move. See you in the next one. Hold strong.